The 3 to 8 trap strategy is a unique trading approach that focuses on identifying and capitalizing on market traps between the 3-day and 8-day moving averages. Through this strategy, traders seek to take advantage of short-term market movements and anticipate potential price reversals. Market analysis is crucial in the 3 to 8 trap strategy as it helps in identifying potential opportunities and threats within the market. By understanding market trends, consumer behavior, and competitor actions, companies can make informed decisions to effectively implement the 3 to 8 trap strategy. Technical analysis methods such as moving averages, RSI, and MACD are essential tools for market analysis. Moving averages help identify trends and support/resistance levels. The Relative Strength Index, RSI, measures the speed and change of price movements, indicating whether a stock is overbought or oversold. Meanwhile, the Moving Average Convergence Divergence, MACD, provides insights into the strength of a trend and potential trend reversals. Fundamental analysis involves analyzing company financials, industry trends, and economic indicators to assess the intrinsic value of a stock or security. In the 3 to 8 trap strategy, sentiment analysis and news tracking play a crucial role in identifying potential market fluctuations and trends. By analyzing the sentiment of market news and social media posts, traders can gain valuable insights into market sentiment and make informed trading decisions. Support and resistance levels are key elements in market analysis for the 3 to 8 trap strategy. Support levels represent the price level at which the market often bounces back, indicating a potential bottom, while resistance levels represent the price level at which the market often stalls or reverses, indicating a potential top. By identifying these levels, traders using the 3 to 8 trap strategy can make informed decisions about entry and exit points, as well as potential stop-loss and take-profit levels. Market volatility and volume analysis play a crucial role in determining the effectiveness of the 3 to 8 trap strategy. Volatility can impact the frequency and magnitude of price movements, while volume analysis helps in gauging the strength of market participants' actions. Understanding these factors can aid in identifying optimal entry and exit points for implementing the 3 to 8 trap strategy, which relies on capitalizing on short-term price fluctuations. Monitoring market volatility and volume dynamics is therefore essential for refining the strategy and maximizing its potential returns. The application of trend identification and pattern recognition is crucial in the context of the 3 to 8 trap strategy, as it involves analyzing market trends and identifying recurring patterns to make informed trading decisions. By leveraging trend identification, traders can spot potential opportunities for market entry or exit, while pattern recognition allows for the detection of specific price movement sequences that indicate trend reversals or continuations.